So crypto realized vols collapsed by about 30 points in the last week. So it was obviously realizing kind of 70 odd up here. It's kind of tanked down to around 40. Similar story on Ethereum, falling back as well. Now, as spot has kind of broken this key level, 40K on Bitcoin and 24K on ETH, we have seen a little bounce in realized and implied, but in general on the week, we are still seeing things lower. Now, we obviously had a big retest post the event on the ETFs first, but BTC continued to sell off about 5 vol points in this kind of 1 to 2 month area of the curve. But ETH really got slammed by about 10 vol points. So big chunks of upside calls were being sold on ETH in March and April, which we'll talk about in a bit more detail. But that was really the driver that took ETH vol down really hard. Vol carry back to neutral on ETH and positive on Bitcoin. Very typical behavior where implied vols kind of go lower first and then realized vols catch up because implied vols anticipate that things are going to stabilize. So that's exactly what happened there. At this point, I don't really like selling BTC Gamma right now. I think it looks unattractive to sell. I think we're at this key 40K level. I think dealers look like they're short in Jan, expiring this Friday. That could lead to quite a bit of turbulence. And so I don't think I'd be in a rush to smash out some Gamma right here, right now. I'd want to kind of see whether we bounce from these levels and stabilize, or if we break and test 38K. And if we're doing that, I don't think we're doing it in a stable fashion, which is why I don't think selling Gamma makes a ton of sense right now. Okay, that's realized. Jumping over to term structure, you can see the curve shifting lower. BTC, slight backwardation still maintained as we do break those levels on the short end. We do break those short-term support levels. So front end weekly stuff catching a little bit of a bid. As you can see, 5 vol drop in the middle of the curve, Feb and March. Back end dropping by about 2 vol points. You'll notice the April expiry did come into the curve, but we don't really see much of a kink there. It's fairly smooth. So that, bear in mind that the halving might happen in April, but it's not like on the day of the halving, suddenly BTC is going to reprice by 5 or 10%, right? That's not how these halvings tend to work. It's just that we now know that the supply of Bitcoin that is coming to the market is reduced. So that's a structural positive thing, but that's not a one-day event. And that's why I don't think we're going to get quite a kink like we saw with the ETF approvals. I don't think we're going to get the same thing for the halving. I might be wrong, but that is definitely my bias in terms of how I'd expect the vol surface to behave going into that. Now, ETH term structure, similar moves, but just more pronounced. So seeing a 10 vol shift lower in the middle. We're seeing more of a Gamma bid coming to the front as we broke that 24 area. But the Vega really coming under pressure across the curve as we see that overwriting flow come back. So that long-term vol premium of about 8 vols that we were seeing in ETH has completely evaporated and gone away, right? And you can see that clearly here on the RV chart, on the relative value chart, a big shift in this white line down to the green line. And that is just basically saying, yeah, Ethereum vol got annihilated relative to Bitcoin vol. It couldn't hold its premium. So you can see here, all these spreads across the different expiries have all collapsed back down to 0. So we're looking at roughly flat vol between Ethereum and Bitcoin now across the curve. Now, the realized vol has still stayed in about a 5 vol point premium for Ethereum, but that hasn't helped the vol spread stay up there. And the reason being is that these large overwriting flows have just been too big for the market to absorb. And so the market makers are just wary to take too much vol down because they've seen it before. When these overwriters come, they're relentless. They come every single week. They come in size, and these guys know that chances are they're going to keep getting hit in this stuff. So they just call it down. So it trades down on not massive volume, and it just goes, quickly to flat. Now, the spot spread we mentioned did bounce 25% from its lows post the ETF approval. It has drifted back about 5% from local highs. We do like that medium-term spot spread, ETH versus Bitcoin, but we do think it's going to be volatile along the way, right? So, if you can zoom out and just hold it and not worry about the swings, then fine. But, it is likely to be volatile, and we are starting to see it be quite volatile. Now, those looking to get that ETH, that relative value ETH exposure, might want to consider cool switches again, given that the spread has gone back down to flat. It allows you to enter that spread that we mentioned a month or two ago at good levels. I would do it longer dated, probably 6 months or longer. We'll do it way out of the money call options, talking about 10, 15 delta stuff. That'll give you less exposure to short-term noise. It'll get you into that trade if ETH really does outperform materially by, let's say, 30, 40%. Then you'll do well. But if it's noisy and if it doesn't outperform and Bitcoin outperforms by 10% or whatever, you'll be able to digest that without too much damage. That's the theory. So that's how I would structure that trade. Okay, so that's relative value. Looking at skew, BTC skew term structure was pretty stable this week, right? It had already flipped into a put premium in the front. That has kind of gone a little bit deeper. The weekly put premium about 6 to 8 vols due to this hedging demand that came in on Jan. And then long dated, we're still seeing a 5 vol call premium in December. So the longest expiry that you can trade in Bitcoin on Deribit. Similar to what we've seen in implied vols, we saw dramatic moves happening in Ethereum skew. So just like got really big moves in Ethereum vol, we got big moves in Ethereum skew. The weekly skew is blown out to over 10 vols for puts. And that put bid persists all the way to April expiry, where you still got a 2 vol put premium. And then the call premium does exist in the long end, similar 5 vols in December that we're seeing in Bitcoin. We're also seeing that in Ethereum. So a little bit of a change there, right? We were seeing that ETH calls were better bid than Bitcoin calls. The narrative was shifting, and then all of a sudden it's like, oh, everyone got so bulled up and so optimistic on Ethereum and they didn't have any hedges in place, and suddenly Ethereum starts to break levels, and it's like, oh, get me hedged. So you suddenly see this influx of flow in the short end. Well, you see two things, right? You see the call sellers come in, which basically pushes skew towards puts because it's a supply of upside, and then you see the put buyers come in because they're worried that you're going to break that key level of 2150. And if we do, you want to protect your holdings. So therefore, weekly puts just go nuts, which is what we're seeing. And they're going above 10 vols. Okay, so that's kind of what we're seeing there. You're kind of seeing people got a bit stretched in terms of their risk. They got a bit overly confident, and now they're reacting to that by coming in and hedging themselves. All right, that is the vol summary. The dashboards here obviously all flipped into kind of a bit oversold. So saying bullish riskies on Bitcoin. I think it's early, personally. I think we need to let this thing digest, see if all this grayscale selling is done, wait and see. So I wouldn't really step in front of it right now. Flow-wise, volumes were down 60% on Bitcoin. Obviously, we got a big spike in volume the previous week. But the big flows that we're seeing, calls were getting sold out, but calls that weren't working, basically. Protection getting bought in Jan, 40 strike puts, 40,000 strike puts, and March, 30,000 strike puts. So a bit of protection buying there. And then some buyers of buyers of February, 44 strike, 44,000, obviously, 44K strike straddles came in, buying up some cheap vol as things got a bit stable last week. And then that actually was timed very well. After they bought those straddles, we then saw them move down below 40K. So some opportunistic vol buyers coming in post the vol reset and actually doing quite well there. And that was the major flows we saw in Bitcoin. In terms of ETH, volume's not down as much, 20%. Large overwriting flow really accounting for the majority of the volumes, right? So you can see here the really big clips here in March and April, 29K calls. We saw some short covering of Jan 26 calls, but that was offset in Jan with some selling of local stuff as well. And then also some strangle sellers in June as well. So just Vega getting sold all over the place. Talking about like 250 to 300,000 Vega getting sold in Ethereum, which is quite a big chunk in Ethereum, which is why it proved to be quite hard to absorb, and it had such a large amount of impact on the implied vol. Okay, so that's the flows. In terms of gamma positioning, we can see here that BTC dealer gamma remains very short. We obviously blast through the 42K strike down to the 40K now. So we have moved a bit away from it, but you can see the dealer gamma still appears pretty short here. So that would make me think that we are going to continue to remain choppy. So not only are we choppy because we're at this level that is a big level for people to keep an eye on, and we've broken it. It's also because the dealers are going to be chasing their tail on their short gamma. ETH dealer gamma a bit different. It's actually still positive. It did blip down here. I don't know if that was just data issues or if that was real, but basically dealer gamma in ETH is longer. You can see how the strike breakdown is. They're long a bit at 24 and they're short the higher strikes, but we have actually now moved down to 22. So the long dealer gamma will dissipate if we keep going down. And actually, if we keep going down, I suspect you're going to find more protection buying come in as well. So that will flip negative if we go down. But if we rally back, that will stay positive, right? So that's kind of how I would see it. In a rally, you know, I think going towards this 2,500, dealers will flip short gamma, but you've got this longer dated stuff beyond that. So that won't let the gamma get too out of control. So I think in general, I still think, even though ETH is moving at the minute because it's breaking levels, I do think the gamma setup is for Bitcoin to move more. But this just goes to show you that I don't think that the gamma positioning in these names is big enough to overwhelm what's going on in the underlying assets, right? So I think the technicals and the flows are overwhelming the gamma. But if those other factors aren't actually having any impact and there's not much going on, then the gamma can kind of control things a bit. And you can start to see like ETH getting stuck around a strike because there's nothing else going on. But right here, right now, I don't think the gamma positioning is anything like big enough to hold ETH anywhere near where it is. Okay, so that's kind of how I read that. That's the summary for this week in crypto. Thanks a lot as always. I'll catch you guys later.